After the violent unrest caused by the elections in France, the market began to come to its senses and shift attention to economic indicators. However, the calm turned out to be temporary, and the political news again intruded into the currency and other markets. Today, the markets are driven mainly by the shock of the assassination attempt on former President Donald Trump. Against this background, the speeches of the leaders of the two major central banks scheduled for Monday will be received with less attention than usual. In response to the shocking news from the US, traders rushed to buy the US dollar and Bitcoin, but long-term US Treasury bonds were hit by sell-offs. After all, the incident from which Donald Trump emerged with a bloody air increased his chances of returning to the White House with a triumph. If he wins in November, the US will face a Republican clean-up, and this means not only new tariffs but also renewed trade wars. First of all, with China, there will be a disruption in supply, logistics and inflation acceleration. A new round of consumer inflation will keep the Fed Reserve from cutting rates. Such prospects will raise Treasury yields and allow the US dollar to rise from the ashes. The macroeconomic picture seems to set the stage for a rate cut by the Fed Reserve. The cooling of the labor market and the slowdown in inflation to its lowest levels in 3 years provided comfortable conditions for the start of a monetary easing. But the bad omen popped up on Friday when the factory inflation report was published in the United States. The annual producer price index climbed from 2.4% to 2.6%, though analysts had projected a flat reading. Based on this information, there is a risk that the current slowdown in inflation in the US may be short-lived and it will begin to rise again at any moment. This, of course, can make the Fed Reserve revise its agenda for monetary easing. Jerome Powell is expected to comment on the current situation in his speech today. However, the markets are already agitated. Thus, the US Fed Reserve Chairman will most likely prefer not to add fuel to the fire and will limit himself to streamlined phrases about possible plans for the funds rate. In the meantime, shorts at the Republican candidate and the 45th president of the US revived the American currency. The greenback was losing ground almost all Friday. Its index opened the new trading week higher within the intraday corridor between 104.10 and 104.30. The US dollar could have recorded to a greater extent unless a sudden sharp strengthening of the yen. The Bank of Japan carried out a highly anticipated intervention in forex to withdraw a certain amount of the national currency from the market. On the back of the dollar's retracement, this decision looks correct. Meanwhile, the dollar-yen pair is consolidating well below last week's high, and the instrument is now trading at 158 yen per US dollar. As for the European currency, today's market sentiment largely depends on industrial production data and the comments of ECB President Christine Lagarde. She will speak at the Eurogroup meeting, and this will happen after Jerome Powell's statement. So, surprises are possible for the euro at the end of the New York session. The main drivers of the single currency were news from the United States and economic reports on industrial production in the Eurozone. As data published today showed, factory output in the euro area has slowed marginally in May. Analysts had expected the indicator to slow down the pace of decline from -3% to -2%, but the actual figure only rose to -2.9%. But even with a minor improvement, the single European currency rebounded to its Friday highs. In addition, after the failed assassination attempt on Donald Trump, the US election race is becoming unpredictable. Facing unpredictable political risks, investors will certainly try to minimize them by any means. Then this can be done by selling dollar-denominated assets. So, the euro-dollar currency pair only benefited from this unpredictability. The euro closed the previous week above 1.09, which has already confirmed the growing bullish sentiment among market participants. On the other hand, the instrument will almost certainly experience increased volatility. At the same time, consolidation risks will also grow, hence reaching the levels of 1.09 and 1.0935 may encourage the bulls at least to take profits. On the other hand, if the price settles above 1.09, this may enable testing of the next round resistance level of 1.10. The bullish scenario will be relevant if the ECB does not signal the intent to lower the refinancing rate in September and retail sales in the US disappoint. An alternative scenario assumes stagnation or a pullback due to signs of about euro on a small time frames and a breakdown of the resistance level over 1.09. Oil prices seem to be less dependent on political news than currency pairs. For example, the benchmark Brent today remains at the lower end of the range from $85 to $86 per barrel. At the same time, the information background regarding oil remains unchanged. In theory, the market should move to the upper border of the range. However, recently, due to the lack of any other news, the Brent price is more focused on the data on the US oil inventories. The data will be available tomorrow, so the Brent crude may hover around the current levels for about another day. But from the point of technical analysis, the pullback that occurred last week has slowed the pace of decline. Now, the level of $84 per barrel acts as a support. If a Brent holds above this support line, the trading amplitude will form in a wider range of 84 to 86. That's the main upward cycle will also intensify. You have watched the roundup of the global financial markets for today, July 15. Keep close tabs on the global markets on the InstaForex TV channel. Feel free to leave your comments. Our experts are always ready to answer your questions. Thank you for watching and see you online tomorrow.